probably the best way to market it. For us, it's like we don't believe in just passively email blasting it out and expecting people to, oh, hey, look at this deal, let me focus on it. A lot of times we're battling either like in a hot market, we're battling like 50 other deals on the market, or right now it's like, we're battling a bunch of overpriced deals. And it's like, no, you really need to focus on that. And you can't, it's difficult to do through email.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, we are back with our guest, Mark Allen, continuing the conversation. We dove into a number of things yesterday, even the 2023 review and thinking about, 2024, what to expect. But we're going to continue the conversation and whether you are a buyer or seller or potential buyer or seller, right, or a passive investor, you're going to learn a lot from Mark today. Maybe speak to some of the things you see top-notch operators doing, right? You're underwriting so many deals, and maybe you could even start there, like what you see even in the underwriting that people are focusing on or doing well versus some that are not, or how they were even prepared for, maybe that's a better topic, how, they were prepared better for this type of downturn or environment that we're in versus, 18 months ago.
Yeah, I think some of the items that I mentioned, I invested with a local group here in Dallas-Fort Worth, and they buy in some various markets across the country. They've owned in Houston, San Antonio, all the Texas metros. They also own in Tennessee. And generally, the sponsor's got a lot of experience. He's been doing this for 40 years. He started as a mortgage broker and then, took some of the income that he was making, bought some small properties in San Francisco, years ago, and then, has scaled up. And I think, with his kids, I think has got a little more into syndication and has taken institutional equity. So he's got a varying range of experience for all the way from Class A, institutional quality, $70 million plus assets down to, Class C properties built in the 60s and lower income areas. And frankly, because of that, it's been a favorable market. He's kind of riding the wave with interest rates down and appreciation of property, especially getting in early in California. So he's generated a lot of wealth and has a lot of liquidity and is kind of later stage in life. But so that's one thing. I know if a deal's going wrong, he's going to be able to kind of step in first. He does self-manage. They have a few thousand units. He's got a great team, all the way from property management players, to the asset management team. So, the people are stellar, and, really sharp, just, institutional level experience on the asset management side. Not that you need that, but I'm sure there's things you learn from a very high level that are beneficial at the institutional level with all the resources and information and, quality of folks that you have at hand. So those would be a couple of things. And like I said, location isn't, at least for me, I think sponsor first over location. I wouldn't say micro location, probably more like macro location. Like I'd go into some smaller markets in Tennessee with them or whatever the case may be. Just because I know they're a good operator, but you also have to look at the micro location, income levels, schools, how walkable or close to amenities, and if it's workforce housing, maybe public transportation or whatever the case may be. So I don't know. There's so many things you can look at, and you can honestly get overwhelmed. But I think from a very high level, I think sponsor number one, and micro location number two. But along with an experienced qualified sponsor, the fees are probably a little bit higher. Is it worth the fees? When you look at today's environment, I think so.
I agree. Yeah. I couldn't agree more with what you just said about the operator and then the market. And you're paying that operator for his experience, right? And right. You're even trusting the decision to what markets they're going into, right? And the 40 years experience, like you're talking about, there's a lot of value to that for sure. Mark, what would you say is the biggest risk for even buyers today? What are some of the things that you see are killing deals other than maybe interest rates, or some things they should be considering?
Yeah, I was going to say interest rates. but I guess it depends. Like, and I'm going to say if you're looking at folks that use JV equity or preferred equity, I guess the risk is just equity appetite changing as the market changes, and the way they price deals and look at different assumptions. I had a deal that we had a signed LOI. We're negotiating the contract, kind of a hairy deal with a development component as well. And all of a sudden the equity kind of, backed off. It, not only did interest rates go up quite a bit, and whatever it was, 90 basis points in a matter of, a month or something like that, month and a half. But also just headlines with, DFW rent growth negative, and some of these things started to come out, which just changes sentiment. And they say, hey, we were, projecting year one, just organic and rental inflation. We want to tail that back to zero for the first 2 years. And, we want to change our exit cap rate assumptions and XYZ. So those are probably like, the biggest risks and hard, really hard to qualify up front. And, generally, if you look at the most active buyers in DFW, they're syndicators. They're those who have discretionary equity and don't have one big check writer. And frankly, I mean, those are and they built really good reputations. They're really good at raising money. They're really good at what they do. So because of their reputation, brokers are definitely pushing them to their sellers as top buyers. Like, you want someone who can close in today's environment with all the volatility. So reputation is, I wouldn't say everything, but it's a big key factor in getting deals done today.
Yeah, no doubt about it. What about sellers? Should we still sell? And you said it's a great time to buy, but is it a great time for the sellers right now?
Yeah, I mean, when you look at the sellers in our market, generally, like you won't sell unless you have to sell, or generally maybe you bought in 2000, maybe you bought the asset 2015, 16, 17, 18, or whatever the case may be. You've implemented your business plan. I mean, there's been folks that, again, like taxes, insurance, man, it's just eating up my cash flow. And I'd rather, sell it, maybe do a 1031 exchange into a higher quality asset, whatever the case may be. There's varying motivations, and you just have to figure out, I guess, if the pain point is painful enough to trade out of the property. But, generally, and that probably depends on the market, because you got to look at capital inflows too. We got a lot of capital flowing into Dallas. I can put out a Class C deal and have, 15 offers. I can put out a Class B deal and have, 25, 30 offers. If the property is priced to meet the market, that's a key. There's been a lot of properties that have gone out that are just, whether the broker mispriced it or the seller has high expectations, and the broker just says, well, let's see what happens with this. But if a property is priced to meet the market, and I think this is probably the case, maybe not as many offers in in Houston or Atlanta or maybe some other places, partial here to Dallas. But generally there's going to be good in today's market for a properly priced property.
What about what's maybe a biggest challenge in your operations right now, or business?
It probably just goes back to, like, you feel like when you're in the market too. I mean, it depends with the sophistication level of the seller, but as a broker, I'm in the market. I eat, sleep, and breathe multifamily. It's all I do, day in and day out. I'm reading a lot of information, tracking a lot of data. And so again, kind of going back to the conversation where it's like, hey, I think now is the time to go, because you can still, it's not going to get better from here, and you got a maturity coming up, and you can still, there's a return of capital to your investors, like these conversations in 2022. And I mean, again, you just hope that, and I get it, there are tough decisions to be made, but you hope that things will get better, and they just haven't. So it's frustrating when, you feel like you have all the data, you're advising to the best of your ability with all the information at hand, and the sellers want to go a different direction, and then then things don't get better, and you're like, man, I guess hindsight's always 20/20, but that's a frustrating thing. We're working just as hard right now, brokers across the country, and we're definitely, revenue is way down. So, we're feeling the pain as well. And so, that's not that it's a frustrating standpoint, but we're working hard and we're advising to the best of our abilities, and there's just less transactions happening. So, it's fun, and not that I think I've learned that over the years too. It's like, it's not all about, I like doing deals and getting deals done, but, in the same respect, to me, I think the business has become more fun when I feel like I'm part of the team and like I'm part of the deal. And, usually I don't have any, investment of capital in the sponsor's deal, but I have an investment of time of advising them, over a period of time. And so to be, felt like you're part of the team and you're in this, like, working in their best interest to try to make educated decisions or help them make educated decisions, versus just running on the transaction hamster wheel.
Yeah, no doubt, a big challenge. It affects the brokerage side as much as it does us, right? As the operator or trying to buy, no doubt. What
Yeah.
about what's maybe your best advice for passive investors right now? I know you mentioned operator, the market. Anything else you would add as far as them looking at deals or things they should be looking at when they're trying to underwrite or anything around that?
I think it comes down to education. I'm not in it like you are, but I would imagine, I know there's a lot of folks that have done really well. There's a lot of folks that want to invest in real estate that have exited companies and whatnot. They're obviously, intelligent individuals. There's just a lot of nuances, I think investing in real estate. So it's get educated so you yourself can do the due diligence, not only on the sponsor, but also on the deal as well. I think that's probably one of the biggest things is just get educated. There's so many resources out there. Of course, there's an investment of time to be, to learn, but, some of the seminars and conferences and things like that, I think could be helpful. And then there's a lot of good online resources as well.
What are some of the most important metrics that you track
In brokerage? And this is probably even more important in a non-disclosure state like Texas. But data and information is key. There's a lot of data sources out there, such as CoStar, that brokers subscribe to. And again, in a non-disclosure state, there's a lot of bad data out there. So just being the boots on the ground, just trying to track just a lot of data and information as far as which of my competitors have listed what properties. Did they close the deal? Did they fail? What is their success ratio? What did the property sell for? What was the cap rate? All this information that's collected helps me to become more valuable for my clients. I think that, and then from I guess maybe a personal brokerage standpoint, we're always tracking our KPIs, which are, probably the two most important is calls and meetings. When you list a property, probably the best way to market it, for us, it's like, we don't believe in just passively email blasting it out and expecting people to, oh, hey, look at this deal, let me focus on it. A lot of times we're battling either, like, in a hot market, we're battling like 50 other deals on the market, or right now it's like, we're battling a bunch of overpriced deals, and it's like, no, you really need to focus on that. And you can't, it's difficult to do through email. So, phone, text, email, we use that combination. We're going to networking events, that's another KPI. How often are we getting in front of people and sharing information about our listings? So anyways, those are a couple of important metrics that I track.
Any other habits that you're disciplined about?
I mean, I think, most brokers generally are probably, pretty disciplined folks. I think, just coming from a military background and an athletic background, I've always been inherently disciplined. So, I still wake up every morning at 5:30. I take some personal time, some reading, spiritual, I read the Bible, kind of do a daily devotion, and then I get after my workout. And now I've got little kids, so I'm just kind of disciplined in that. And it's like, I think it's tough and I don't know if you can relate with this, but it's tough for guys, especially those that are growth oriented, just to balance everything in life. So I feel like that's one of my big goals this year is just to be, I feel like I'm home a lot with the family. Like work has gone great over the past several years, as we, continue to grow the company and the brokerage business. Now that I have little kids, I think just trying to set boundaries with technology. I think that's one of my, just a reflection point. That's a big challenge for me, and just being more present, more intentional, with my wife and kids. So anyways, kind of deviated from your question about discipline, but yeah, generally that's kind of my routine. I get in the office, I time block. I have, time where I call, where I'm, focus on the deals under contract and kind of make my rounds there. And then, times when I'm kind of look at underwritings and things like that.
Yeah, no, I love that. And I appreciate you even going in that direction. I think all of us battle with that. Whether you're driven entrepreneurially or in business or in your career or not, most people still struggle with holding the phone in front of their face, right? Instead of speaking to their child that's standing there in front of them, right? Me included at times. I've had a big push on this recently. My wife has been challenging me when especially, or I get home, the phone needs to stay in the office, right? And I need to do a better job at that. Or even gets good, like just turn it off, right? The rest of the night or something like that. So I need to do a better job at that as well. But I think it's a very common struggle. We think there's a balance. I'm not sure there is a balance, right? But man, you got to be intentional. And if you're not, man, the years go by and they're all of a sudden they're driving and are gone, right, out of the house. So
yeah, no, I was going to say I feel for you because I'm doing a land development deal, and with a friend of mine and my father as well, and we brought, we closed the land in cash. I think we brought 7 other investors into the deal, and I have one that he'll touch base with me because we're going to do great. I think it's going to be a 36% IRR. We're right at the finish line here, but the timeline has been a little bit longer, than expected. And so, I get calls from him every now and then. I'm like, man, I cannot imagine being a sponsor with, 100, 200, 500 investors. Or as a broker, I, generally have, 1 to maybe 3 or 4 clients at a time, with active listings that, I'm talking to on a regular basis and managing. So if they, it's a challenge when you get home, and, some people are, have, I don't want to say more needy, but maybe that, a little more needy. They want to know, hey, what's, I just talked to you 4 hours ago, but what's changed? And I think at this point in my career, I've been try to be a little more selective on who I work with. So, try to work with people that are aligned, value wise and business wise.
Makes a ton of sense. No, I appreciate you sharing that as well. It's definitely helpful. No doubt about it, to be aligned in those ways. So even with your investors, if possible, right? Because they are going to have questions. That man, in a development deal, if somebody says 12 months, I usually think, okay, they meant 36. That's what they meant.
Yeah,
that's what I tell myself. Right.
Yeah.
But Mark, what would you say? Or how do you like to give back?
Probably the biggest thing over the last few years, just with the crazy busyness of brokerage, has been more monetarily than time. We are pretty involved in our church. It's a benefit that our church is right across the street from our neighborhood, especially with a 2-year-old and 4-year-old. Generally it's through different organizations. I'm part of an organization called Mercy Street for the past, I think, 6 years now. And it's basically a West Dallas organization, kind of Southwest Dallas, where it takes kids from just lower income, families. A lot of them don't have father figures. So it's similar to like Big Brothers, Big Sisters, but it's, through a local church here, a partnership with a local church. So I've had a mentee, for quite some time, and I've started in 4th grade. Now he's in high school. And I think just naturally as time has gone by, they move further South Dallas. I moved further north, and, kids and stuff like that. I used to see them like every other week. And now it's just a few times a year, but it's, good with technology and staying in touch. So get back through Mercy Street. And then there's a handful of different organizations, both nationally and locally, that I give to as well
Awesome.
from a charitable perspective.
Yeah, appreciate you giving back in that way. We all need mentors, right? Mentoring, and especially young men and ladies, no doubt about it. But appreciate you spending that time, right? It's an investment, and it could change generations, right? Just helping that individual at such a young age. So thank you for that, Mark, and grateful for your give back to us through this series. I know we did. We'll do a couple shows here out of this, and just grateful for your time and talking through. I know mostly Dallas Fort Worth, but even just the market in general in 2023 to 2024, what to expect, what you expect, and distressed deals to conversations with lenders and good time to buy and tips for sellers and buyers and passive investors. So we've covered a lot. Mark, thank you again. And how can the listeners get in touch with you and learn more about you?
Yeah, best way is either through LinkedIn. GREA.com. Feel free to visit the website to get in touch with any of the team members or look at the properties we have for sale. You can reach me via email, mark.allen@grea.com. That's mark.allen@grea.com.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.